Hi everyone, welcome to Bond Bytes Daily Bond Market Highlights from INRBonds. I'm Arjun Patsarthi, and India is looking very good on the external front and on the macro front. We have had our fiscal deficit for the April-August period come in at 18-year lows, which shows that the government finances are improving rapidly post the COVID, and tax collections are improving. And as the economy is picking up, the government is able to show more revenues through tax, which is helping fiscal deficit come down to its 18-year low levels. On the external front, we have the current account actually coming in surplus. So when we mean what is surplus current account, it means that the inflows from exports and other services are higher than the outflows from imports and other areas, right? So when current account is in surplus, that means the country is in a reasonably good footing. But however, this could change in the next quarter and coming quarters if the demand for oil in the economy increases, as oil forms one of the largest components of our import bill, and the trade deficit will rise. So we have the current account coming in at surplus for the first quarter of this year. We have a low fiscal deficit, and on the external debt front, we also saw that India's external debt is actually, as percentage of GDP, is actually down from the last quarter and last year, and also the short-term debt to GDP, which is more telling because the short-term debt to GDP is something which has driven most of the economies that have faced severe problems. For example, Iceland uh, in the previous past and the Asian crisis in the 90s, all caused by very high short-term debt to GDP, and India's short-term debt to GDP just around 17%. Is come down and is looking very healthy for the country. So in macro front, India is actually really doing well, though it's not translating it into the government bond auction where the G-Sec 10-year G-Sec yield cutoff came in at higher than last time. However, that is largely an impact of RBI looking to start normalizing policy. Maybe they'll give a guidance next week in their policy review, and also in sympathy with the US Federal Reserve looking to raise rates sooner than expected. Don't forget to subscribe to our Quick Invest, which is our retail bond platform where investors can come, check the bonds, and buy the bonds through a seamless process at the right price, at the right level, and with full information and transparency. INRBonds gives you its own proprietary right trading transaction value for the bond, as well as its own credit risk score, that credit spread score that tells you the exact risk of the bond in terms of whether the bond yield or spreads in the market can go up or down in the coming period, and how much of risk the investor is taking in investing in the bond, and whether the risk is commensurate to the yield offered on the bond. These are all INRBonds' own proprietary models, and we provide that much more information, including issuer information, as well as a whole host of other things, including end of month valuation for your bonds. So INRBonds is the best place for both financial advisors to check bonds for their clients, as well as direct investors to look at the bonds and invest for their portfolio. And our team is always available for support at any point of time. Thank you for listening, and do not forget to subscribe to our YouTube channel. And yes, thank you for listening.